Hi everyone, this is Rob Roy of Elliott Wave Options. We just finished tonight's TradeFinder live webinar. We had a great time. If you weren't able to join us, here's a summary of what you missed. In tonight's TradeFinder, we took a look at the market, and you can see by the chart of the market that we did have a down day today. And I think it's important to take a look at the volume, because one of the things that I noticed yesterday was we had very low volume. So we had a bit of a bounce to the upside yesterday off that 450 level on almost no volume. I mean, that's kind of like a holiday volume, one of the half days where we close at 1 o'clock. And then we finished to the downside today, but when you look at the volume today, you can see we didn't get the average volume today either. So can you put a lot of weight in either one of these 2 days? I don't think so. And I think what really matters is the fact that we're going back and forth right at this level of support resistance at 450. And where we go from here is going to go a long way in determining where the next impulse move is. We've had a pretty big rally off of the lows, a little bit vertical for me. So from a bullish standpoint, you can say, okay, well, we're consolidating that vertical move. That's a bullish sign. Couldn't argue with that. You take a look at the moving averages, we closed kind of right at the 10-day moving average. I hit a little bit below it, but pretty much right on the 10-day moving average. So we could easily bounce to the upside from here in another impulse run, considering that would be a pretty positive sign to consolidate a vertical move in a sideways fashion. In other words, we didn't give much back to the downside. I think we could even come back to the 50-day moving average. And if we did, then I would be looking at more of a potential zigzag pattern to the upside. So if we were to retrace that much, that would qualify as a pretty nice zigzag pattern. But we're not there yet. Another interesting thing that I've observed in the markets the past 2 days is yesterday there were no sellers. They just weren't there. The market kind of moved to the upside. The sellers never came in. There wasn't really a downside attempt at all through the trading day. Today, we moved to the upside. We had a pretty good run, and immediately on the move to the upside, the sellers jumped in. They retraced that move, and then we kind of headed to the downside for the rest of the day. No buyers from that point on. Really interesting to see. No sellers yesterday, very few buyers today. Seems like a lot of people are confused as far as where we go from here. So the bottom line is 450 is going to tell us a lot. If we can hold the 450 level, perhaps we bounce. If we break below that level, then I think we might be looking at heading back down towards at least testing those lows at 420. Looking at the Dow, you can see that we came to the downside here on the Dow transports. Now, this was a question that came in on our last SPY update over the weekend. A couple of you mentioned the fact that, hey, have you seen the Dow transports? Yeah, look at that. And we talked a bit about Dow theory. And Dow theory is when you're looking at the industrials and the transports, you can kind of view it either way. If the industrials make a new high and then that becomes confirmed with the transports, you're likely to continue higher over the near term. Or if the transports make a new high and that's confirmed by the Dow Industrial Average, then you're likely to continue to move to the upside. So I submitted that if it works to the upside, it should work to the downside as well. And so some of the comments that were coming in is the transports are getting crushed. Well, yeah, I have a hard time arguing with that. That's a pretty vertical move to the downside. On the bullish side, we are a bit oversold on the transports. So that could lend a little bit into that bouncing off of 450 type of scenario. But on the negative side, we're not that far from the lows. And if we break that 14.8 level there on the transports, then I think that adds to the SPY moving down to test its lows at 420. So really interesting conversation there regarding Dow theory. Looking at the 10-year, you can see that we had this triangle. That's why we look at triangles. That's why we have an entire strategy at Elliott Wave Options on triangles, the volatility strategy. Big break to the upside. Do we get follow through? Now the thing that I was questioning is that something that we are heading for a significant move to the upside in rates, or was this money coming out of the bond market today ready to go into the equities market tomorrow? It didn't move into the market today, but it could tomorrow, again, potentially bouncing off 450. But if we break below 450 and rates continue to the upside, I don't see how we don't test that 420 low, if not go down and make new lows down around 400. I was encouraged by the fact that the dollar seems to be trying to break out of this trading range. As you know, I've talked in past recordings that I really want the dollar to hold 97, and if we can break higher, the dollar being the currency of last resort, I think that's good for not just economic health in the U.S., but globally as well. With the Federal Reserve raising rates, the yield curve inverting, none of those things are positives, so keeping the dollar, I think, is really important. If we were to lose that, yikes. Bitcoin, we didn't do Bitcoin in the last SPY update. We can't cover everything in every update, or we'd be talking to you for hours every single time. So looking at Bitcoin, you can see we still had this ascending triangle. We broke to the upside, but we only hit the 48,000 mark. I've talked about these 4,000 levels on Bitcoin numerous times. 48, 44, 40, 36, 32, all are support resistance levels. And so we broke above, we went from 44 to 48, but now we're back testing that 44,000 level. If we can break above 48, I think we're off to the races and we go back and test the all-time highs in Bitcoin. But if we break back below 44,000 with this triangle pattern, we could be looking at not only testing 36,000, but potentially that wave 5 low. So 44,000 is the key for Bitcoin over the next few trading sessions. Internationally, we looked at the ASX, which has had just an amazing run from that symmetrical triangle pattern. My point is, and the reason I drew that arrow, is I would have preferred to see, rather than this vertical move, higher a breakout more on a 45-degree angle. If you're long the Aussie, you would have wanted to see that 45-degree angle to break this resistance, but we are at all-time highs, so you can't discount that, but you can discount the fact that we've gone there awfully vertically, and now we're just a bit overbought. So a vertical move, when you have a little separation from the 10-day moving average, the best scenario here is for the ASX to consolidate a bit underneath those all-time highs and then try to make a big break and run above those levels. Not really in a 5-wave impulse pattern yet, but if we were to break above those levels, I think we probably label some sort of an impulse. But a little bit concerned about the vertical nature of the breakout. Impressive as it is, however. Looking at Canada, kind of said, well, you know, you said the same thing about Canada. The vertical move breaking above the resistance, moving to all-time highs, and if you break above it, when you're already overbought, less likely to hold, the best scenario would be to test and hold above 40. Well, that's what the Canadian market has done so far. Today, we did finish on the low of the day after trading much higher, but you can see on the high of the day, we did get just a little bit overbought. A more bullish scenario would have been closing somewhere not on the low of the day, but you can take the fact that even though we closed on the low, we still are above the 10-day moving average. And perhaps that's the consolidation needed for the break above that resistance at 40 to set up the run up to that wave 5 target in the 42.5 range. So 40 is the key, as it has been over the last couple of weeks on the Canadian market. We stay above there, you stay bullish, we break back below 40, then we have to reassess and take another look at what could be happening there. We did look at silver, which is really just in this larger, there's the triangle that we had last week, and now we have a larger triangle here on silver, and this is the SIL, so it is the miners, not the actual metal. It's not the SLV, it's the SIL, but we'll see where that goes from here. And then we looked at the Qs as well, still have this 61.8% wave 4, and I stand by my comments that I do think the Qs are going to underperform the rest of the markets, whether it's the Dow or the SPY. Even if we go to the upside, I just think the Qs underperform either of those two indices. And right here at 360 is going to be key. That's the key level to watch on the Qs. If we break below that, then you have to respect the fact that with that 61.8% wave 4 correction to the upside, that new wave 5 low comes into play. But if we can hold above 360 and maybe take out this wave 4 here, then we could disqualify this 5-wave impulse pattern to the downside, and you have something else going on the Qs, perhaps more of an upside move. In tonight's TradeFinder, we did identify Hershey Foods. It's in the food space. Got a really solid DMI as a case study consideration for this week. You can see that even when the market moved to the downside in January and February, didn't really affect this too much. Foods got pricing power now due to inflation. It's also a defensive sector, even if the market were to head back down and test that 420 level. Seems like a good place to park money if you wanted something on the more bullish side to look at. We've got an 89% wave 5 extension here, so perhaps we head up towards that 100% level on Hershey Foods. So just each week, if you're not familiar with TradeFinder, we do a case study consideration. We covered off the last ones that we've done, and our performance has been pretty amazing. Go back and look at our past TradeFinders if you haven't looked at them before. And if you're watching this and you're not a TradeFinder subscriber, I invite you to join. You can go to our website, ewotrader.com. It's free. We do this every Tuesday night. We look at the markets as I'm sharing with you now. We look for case study considerations, and then we have a live Q&A. And in our live Q&A, we were talking about the VIX. One of our viewers asked us, what does this mean about the fact that the VIX has stayed under 20 for a few days in a row? Can we relax? Is that a bullish sign? Well, I talk about these vertical moves. I don't like these vertical moves because what goes vertically up usually comes vertically back down. Well, if we're going to talk about Dow theory, working in the opposite direction of how it's normally viewed as far as confirmation of a new upward move, then I think we have to look at a vertical move, the same frame, or in the same vein, if you will. So if the VIX came vertically down, which it did, I think we have to be at least suspect of the fact that we could turn and go vertically back to the upside. Now, this consolidation is positive by the fact that we haven't turned and sprinted back to the upside already. And if we can break below this 20 level and head down towards 15, that does add some credence to a potential bounce higher. And there's other criteria in the background, isn't there? We have Australia moving to new highs. We have Canada moving to all-time highs. Can the U.S. market do it? It could. I mean, we're in a little different scenarios than those two economies based on what our Federal Reserve is doing and what their central banks are doing, but the potential is still there with the fact that you can see these other countries are benefiting from moving to new all-time highs. I think the next couple of trading days are going to tell us an awful lot. So on the VIX, as we wrap things up, we usually do with the VIX, the key level here to watch is 20. If we continue to a follow-through day above 20, we might be back up to the upside, as I mentioned. But if we can break below it, head down towards 15, bullish sign for the markets. Hope you found that informative, and hope you'll join us live next week at TradeFinder. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.